Are you thinking of investing in commercial real estate? Well, these 5 things you must know before you sign on the dotted line and buy a property. You may be buying a gold mine or you may be buying a money pit. So watch this video and I will show you the steps to buying commercial real estate to improve the odds so you buy a great asset. The majority of real estate investors want cash flow, but they don't know how to truly analyze a deal. In this video, I will walk you through how I buy commercial real estate and what to look for and not look for in a deal. My name is Jeremiah Boucher. I have been in commercial real estate for 20 years now, buying good properties, bad properties, and everything in between. In this video, I'm going to give you the lessons learned over my career and help you find the right commercial real estate for you, your specific situation, by teaching these hard-earned lessons that I've had over the years. So by the end of this video, you will know the critical numbers and attributes of commercial real estate that you need to focus on so you don't get burned and you be sure to buy the right property that works for you. All right, so what do we look for in commercial real estate? Well, I've learned location, location, location. It sounds trite, yet it still is the foundation of great real estate. First question is the market growing or declining? The destiny of your real estate investment is in the demographics. Are people moving to the area? Are there jobs in the area? This is what fuels demand for any type of commercial real estate. This is what I look for, is a growing population in the market. Number 2, proximity to employers, to highways, to services, hospitals, schools. Is it a neighborhood area or is it an industrial area that you're going to need access to highways? So look at the location and does it fit that type of commercial real estate where you're going to have the best chances of success because of the visibility or the location of the needs of the users, the people actually occupying the real estate. Understanding zoning. This is a critical piece to commercial real estate. You can only have real estate in properly zoned areas. Many times they get grandfathered in, and these can create barriers to entry, which are great. If you cannot build another storage facility in that town and you own the only storage facility, you have an economic moat like Warren Buffett shares, and you can dominate that market. So understanding the zoning of where the competition is and where your property lies is really important to having a successful commercial real estate investment. And then following the money, looking where regentrification or reinvestment in an area is occurring. Right now, I noticed in Scottsdale, Old Town area of Arizona, there is a influx of new development and a lot more money. That's already an affluent area, but a lot of redevelopment and more money flowing into that neighborhood, and that's going to drive values up over time. You want to find areas that are getting investment in that region, especially with jobs or with new development of multifamily. These are very helpful to continue to increase demand and increase the appreciation on your assets. So next, look at the tenant mix and the lease structure. Very important here, especially when buying any type of real estate that has multiple tenants or single tenants with long-term leases. So I bought an industrial property in New Hampshire. When I bought it, I got it at a great price, under $70 a square foot. It was a small bay industrial property. The challenge is all of the leases had at least 4 years of term, sometimes up to 15 years of term. So that meant I couldn't change the leases. I couldn't increase the rents until I waited for the term of that lease to expire, which my investors were patient. We knew what we were walking into, but yet it did restrict the return or the increase in NOI on those assets. So look at the leases and see the flexibility around the lease. Now, if you're in mobile home parks or self-storage, typically mobile home parks are on a year-to-year lease, so you can increase the rents every single year. And storage, you're on month-to-month lease. You could increase or decrease the rents every month. So knowing your lease term and the provisions around the lease are everything. The value of your property in commercial real estate is completely dependent on what the tenant pays. The tenant is the one that drives revenue, and the revenue is what generates cash flow and the value of the asset. So know your leases. Now, there's a lot of different types of leases. We have triple net leases, modified gross leases. You have gross leases. In another video, I'll get into the details around that. In this, I do want to share that the quality of your tenant really does define the quality or the value of the asset. So if you have a high quality McDonald's or a strong national bank like Wells Fargo occupying your location and it's a long-term lease, investors are going to pay more for that tenant because it's a dependable stream of income. Versus if you have low-end tenants, if you have a tenant that's possibly going out of business or they're highly low income with a lot of delinquency and they don't pay, then an investor is going to pay a lot less for that stream of income. So knowing the quality of the tenant is a direct correlation to the value of your building. Next, physical condition and deferred maintenance is a critical piece to commercial real estate. You are buying components of a building. A building is a life of its own. It has a life, and that life is made up of all the components from roofs to foundation to structural columns to the parking lot out in the front. And these components of a building do depreciate, meaning over time they are needing maintenance, needing capital expenditures. So finding out what is the quality of the building and doing a PCA, property condition assessment, is what we do every time we buy any property. You want to get these components of a building inspected. The roof is number one. If you are buying any traditional commercial real estate, roof lives can be anywhere between 20, 30 years. If you have came up on that timeline and there has not been any roof maintenance or roof replacement, that's going to be a huge capital expenditure for the asset. So you need to budget for that or discount the price accordingly. Parking lots are next. I grew up paving. My dad has a paving company. And paving is a critical piece to any commercial real estate because once your roads start to break up and there's debris, one, it reduces the quality or the appeal of the asset. And two, it can create a lot of water drainage issues. And if water doesn't drain effectively, it can create damage. Water is your biggest enemy in your roof or on your parking lot. And if water penetrates the building, it's going to create a lot more issues with mold and your tenants will leave. So looking at these two components are very important. And then there's many other components with the structural alignment, but hire a professional company. They are going to do the right job. And for $3,000 to $5,000, even if it's $10,000, you'd rather get that security that a professional has looked at it and you know the life of the different components of your building and you're not blindsided. Number 4, know your numbers. If you're in business or you own a business, you need to know your profit and loss and you need to know your balance sheet. So what do I mean by knowing the numbers? Well, in commercial real estate, number 1, look at your rent roll. Your rent roll is most important. Rent roll will show how many tenants are in the community or in the asset. What do they pay? Are they current? Are they delinquent? What is the vacancy? What is the occupancy? And that rent roll is going to be number 1 for you to focus on to get a true idea of how the revenue is coming in on the asset. What is the length of leases? Very important to look at all of the components on the rent roll. Secondly, expenses. This is where you're going to look at the profit and loss. And I always like to have a trailing 12, meaning a trailing 12-month profit loss where I can look at each month compared next to each other from the previous month. And you can see what are the trends? Are the utilities higher or lower? Is rent declining? Did property tax go up? And it will go up. So after a sale, you need to be aware that property tax will get reassessed in many states or it will get reassessed over a period of time. But knowing your expenses is critical to understanding what the net operating income is. You want to look at those trends. And then the balance sheet. Balance sheet is not that important to look at from the seller's standpoint, but what you do want to look at is the capital expenditures they invested in the property. Right? When you do a capital expenditure or a long-term improvement to the asset, like a roof repair or a parking lot repair, the IRS requires you to capitalize the expense, meaning you can't just write it off in 1 year. You can't expense it on your typical expenses. You have to capitalize it over a period of years. You want to see on the balance sheet, what has that seller invested in long-term capital expenditures? And you'll ask them that question as well, but the balance sheet can help show you that in terms of how much was actually put back into the building to improve it over time. So the next step is looking at the value add potential. If you are a commercial real estate investor looking to get higher than average returns, then you typically are buying value add. So that means that when you buy an asset, it has a current return on investment, but you're going to want to improve that. And the way to improve that, number 1, is looking at the numbers. How do you cut expenses? How do you generate more revenue? That's number 1. But then you look at the quality of the asset and say, okay, what improvements do I need to make? And then how do I raise rents? And what are those market rents? Can I raise rents right now? In certain markets, you can't raise rents in 2025 because the rents are maxed out and we are in a tough economy. If you're looking at a rent roll and there's high vacancy, then you probably on a storage facility or an office building don't want to jack up your rents on your existing tenants because you want to keep the property full and you want to attract new tenants. You may even need to discount rents in order to get those new tenants to fill in the vacancy. And then over time, raise those rents as you get more stabilization and you get more full. Here at my firm, Patriot Holdings, we focus on value-add investing, and this is how I've built my wealth over the last 20 years in commercial real estate. When I buy a property, I look at what can I physically do to change the feel, the look, the identity of the property. So with warehouse or storage, it's lighting, fencing, paving. It's addressing the aesthetics, right? Making sure that the property has a good look, a good feel to it, and you're going to have to do physical improvements there. If you're looking at a retail center or office building, the facade is critical. The signage is the first thing people see, so upgrading the signage to the maximum amount that that town will allow you to have. This all changes the curb appeal and the association to whatever the tenant or the customer that uses your property will feel with the property. Once you made the improvements, then you can change the rents. You can increase the rents. And then you're going to also look at what is the current marketing? How are tenants knowing about us? Do you have a good leasing broker? Are you doing good advertising? In future videos, I'll get into how I fill my industrial and storage buildings or mobile home parks. But in the beginning, you just want to get exposure out there to high quality tenants through obviously online advertising and great signage and great customer service with a manager picking up the phone. Lastly, how are you going to finance the asset? Well, financing is critical in commercial real estate investing. So number one, make sure that banks want to finance it. Sometimes car washes are very difficult to finance, so there's only a certain amount of lenders that are going to finance that type of property because it has a big business component to it. Self-storage is a business component to the commercial real estate. So you will need to find specific banks that like self-storage or mobile home parks. And then you'll find the traditional banks, the larger institutions, they love retail investments with long-term leases, or they love large industrial, or they like apartments. It just depends on what asset class you're buying. You want to find the right lenders that are going to fit the need of that asset and start reaching out ahead of time. You don't want to wait to the last minute after you found a great property to go get financing while the clock's ticking on your due diligence. So building those relationships up front and asking the hard questions. Do you like lending on this type of asset, and what are the typical terms? What would the typical rate be? And when you're looking at the rate, you want to ask them, what index do you base your borrowing on? And then what's the spread above that? So typical lenders will, on mobile home parks, charge a 250 to 300 basis point spread above the index that they're borrowing at. I know that sounds complicated, but what I mean is if their index is the 5-year Treasury bond, then right now the Treasury's at 3.75%. And then if a bank charges the spread, the 300 basis points or 3% above the 5-year Treasury, then in that case, you're borrowing at 6.75% interest. The bank makes that 3% delta between what they borrow at from, or what they peg their index at the 5-year Treasury, and then what they charge you as the borrower. And that is the spread on a commercial loan. So it's important to know that, and knowing what the approximate interest rate would be. That way you can figure out what you can buy and what type of cash flows you'll yield from that commercial real estate. Bonus tip here is look at the local policies in your market. So are they stopping zoning on this particular asset class? Meaning, is there no more mobile home parks? Is there no more storage allowed in these markets? Or is this residential area never allowed to have more retail? That is a barrier to entry. That is what you want to know. And you want to know your current zoning. Are you grandfathered in to whatever use that you have? You'd be surprised where some municipalities will fight you on zoning after you've transferred and bought the property, where they do not want you to have that existing use of what you're already using on the asset. And then next, is there rent control or regulation coming? In many multifamily assets like apartments or mobile home parks, many states or many counties are creating rent control laws that only allow you to raise your rents a certain amount, anywhere between 1% and 5% per year. So it's really important, if you're expecting to raise rents quickly, yet there's rent control legislation, you need to know that, because that's going to limit your upside. So now that you know what to look for in commercial real estate investing, I gave you everything I got on my years of experience. Next, I want to give you, how do you analyze a property? The numbers. How do you factor the NOI? How do you look at income, expenses, and generating the return on investment? So check the next video. I'll show you how to analyze commercial real estate property.